Yes, and we are live. Hello, guys. How are you today? I will spend 10 minutes with you roughly, looking at what I think is three of the most important ratios that we have at this moment in time. There are, there are many important, but I think these are they are having a little bit extra on top. We're gonna go through them, and then I have an extra little teasing ratio as well, which is also very interesting from a cycle perspective, you can call it. As always, follow me on X if you are on Twitter /X, and most importantly, follow me on Substack or subscribe to get the daily updates that we do. Gold, silver, platinum, commodities, oil, you name it. We try to stay on track in this commodity bull market, and gold and silver has been doing really well in 2025. Also in 2024, I will say, but definitely in 2025. Gold and silver has done well. Yeah, let's dive in. First off here is actually a ratio, the URA divided by the U.UN. And you could see here, I did a deeper view on that in this video here, only looking at this ratio alone, because we're coming to a point that is very interesting and important. The reason is, for me, this ratio really is the guide to how to play uranium and the miners. Is again, we have this Vikov accumulation phase here, and this is a 10-year, right? It's 10 years worth of Vikov accumulation here. And you can see I've tried to point out the different highs and lows and phases here. You can see that it is basically tracking this to perfection. And I started to notice this Vikov here like 18 months ago. And when we did the spring there, back in April 2024, I knew again that we were here, right? And as you know, 2025 has been really good for uranium miners. And that is basically this move up here, where we have the URA outperforming the U.UN. And this third leg here is actually the run-up to what I think will be a bit of a pause here, where we will not see the URA outperform, nor will it underperform the U.UN. They will track each other, so whether it will be going sideways, which I think is the most likely, or they will go up 1-to-1 or go down 1-to-1. But it doesn't matter, because I think what we're going to have here is this little spring here. And when and if that breaks to the upside, if we get that coil, we're going to see uranium miners have that beautiful blow off, if you can call it that, or outperformance against the metal. And it will be where they outperform at least 100% the metal, maybe even more. So that will most likely be one of the last phases in this 5-7 year run-up before we have a longer consolidation / pullback. So to me here, this is my guide, and has been my guide for uranium ever since I started to notice the Vikov here on the monthly time frame. And as you can see, it started basically back in 2015, right? So from here on now, I do think we will have some sort of pause in this ratio. It could start at any moment, if this holds true, of course. So yeah, very important ratio, and I think you should look at this every week or so, just the closing week, what's happening. I don't think many people are using that, but I think it's a big mistake. Probably the most important ratio, gold and silver. Look at that. 2021, 2024, and now we're here again in 2025, and we're getting a little bit of a retrace here on the monthly candle. But this, to me, looks like it's going to be something like that. When that breaks, in my view, that is when everything opens up to the downside in the ratio, meaning silver will start to really outperform gold. And also you will see the gold miners, silver miners even do way better than what we have seen in 2025. And they have been on fire, remember? Gold miners has done really well. But once we break the ratio down here, it's going to be even more. You're going to see double the amount of volatility, but also double the amount of gains over time. Then once we break here, the level is roughly, 78, 79, just below 80. When we break that one, we're going to come down to roughly 65, because that is where we have a head and shoulder pattern. We're most likely going to bear flag. We see that all the time. When that breaks and that gives in, you will have the collapse leading into 2030, right? So yes, the miners has done really well, but as soon as this stuff starts to break down, right, that's when you really see a true bull market in silver, gold, miners, platinum, palladium, you name it. The metals is gonna do fantastic. And more often than not, we break on the fourth, right? We hit on the third time to confirm the trend line. Then you have a little bit of a pushback, a little hump, and then you break down, and then everything, really, really starts to move. And I would just like to point out this somewhat similarities compared to 2008. This is just on a bigger scale, a longer fractal, right? You have the blow off top here in the gold and silver ratio. When we had the global financial crisis, we came down and then everything puked, right? And this is the same thing to me here, coming down, larger bear flag, but once it breaks, we're gonna see that 65 first and foremost, but ultimately 30 and probably lower, right, at some point in time. So the level to look for in the gold to silver ratio, I will say, is somewhere just below 80, no lower than 78. From that point on, we're taking out the wick low, and then it is for sure a breakdown. So very important ratio, and this should be your guide to when and if the mining sector really starts to boom, right? Because look at this here. This is basically since we had the tariff lows, and we have come down from 105 down to 80. And just going and look at the mining sector, the GDX, SILJ, uranium, and all that, they are pretty much the inverse multiplied by 2. So this is coming down, mining is going to do that, right? So when we see a bigger move, this one here is going to be even bigger in the miners. It's the inverse correlation between the two, and you can actually do an overlay. And you can see the correlation between the silver to gold ratio to the miners. It's pretty much, it's not 1-to-1 of course, but it is pretty good. Zooming out here, we have DJI, which is the Dow Jones, so the broad market in the US. And look at the expanding structure here. This is back. This is basically 100 years old, right? The big crash, in 1929, the big high in SOXX, the big high in SOXX. This is 1980s, where you had gold just completely crushing everything, basically. Then again, you had the peak there in 2001, right, where we had the dot-com bubble. And you can see here we didn't really come all the way back up again. But what is happening now, in my view, is gold, lovely gold, is gonna potentially go for a tear against the Dow Jones Industrial Average. And you can see we're actually breaking some pretty hefty trend lines here and now, right? You can see the upper here, the rail, right? You're actually breaking that now. It's a bit of a funky trend line, I will admit that, but you can see the monthly candles here breaking down. And also here we could apply a trend line going across. So you take the lows here from 2016, then you have the lows there in 2020 and April 2025, and you can actually see we're also breaking that one to the downside. Meanwhile, we are breaking the 40-year or 20-year support, or whatever that is. I think it's 40 years actually. So Dow Jones is underperforming gold heavily. That is very important, because you can have the Dow Jones go up and people will say, look, it's going up. Yeah, but gold is outperforming. And the question could be asked, are you really in a bull market if you're not outperforming gold? I don't think so. I don't think so. You can go up, but if gold is outperforming you, you're not gaining a whole lot in true value, right? Purchasing power. So Last one here, a promise, and that is uranium miners, URNM. So pure uranium miners ETF. We only have 5 years worth of data. That's fine. But look at this. First and foremost, look at the range here. Basically, we did a little bit of an undershoot here during the Trump tariffs, and then we had this internal wedge, which we have almost recently broken. This is in June, breaking out, bull flagging here, surging. Uranium miners is currently on the weekly time frame outperforming Bitcoin. That is always good to outperform one of the best performing assets, if not the best performing asset in the past 10 years. Which, by the way, I think is going to change here soon, you know, with regarding to outperformance. But for sure, for the past, 10, 15 years, Bitcoin has been demolishing everything. We know that. But you can see here now, ever since we started to break this lovely little inverted head and shoulders, right, breakout backtest rally, uranium stocks is outperforming Bitcoin on a longer term view, right, midterm view. This is basically a 2-year wedge breaking out. So it's not short term, it's not long, but it's also not long term macro, right? But it is really good here. And if we play this golden channel here, we could see a move all the way up to the upside again, which means uranium stocks, more so miners, is going to do 200% outperformance against Bitcoin, whatever Bitcoin will do in that period, of course, right? If Bitcoin gets cut in half, you will not see 200% gain in the URNM, right? So interesting ratio, and I think again, I want to show you this video here because I think ratios overall is heavily underused, because this is where you can really see the cycles, right? Where to go if you want to swing trade. For instance here, right, you can just see the cycles, right? So everything is cycles, and you want to look for the best performing assets in the current cycle, right? For instance, looking at gold miners, gold miners is outperforming gold, but also look at how it is doing against the SPX now. You can clearly see that we have been underperforming heavily for the past 15 years, right? We're not gonna lie. But also we're about to break some pretty hefty stuff, right? The long term, this is 10 years worth of range. And remember, we broke the long-term downtrend over here. And we have basically, since the breakout in 2025, we've basically been outperforming almost the SPX by 100%. So again, we could come to the golden here, pull back, and then when that is broken, you will have gold miners outperform the SPX. So why would you want to be in the SPX? Again, it could be that the SPX is going up 50% or 100% during that period, but you have other stuff outperforming it. And I firmly believe that gold, and now also that the gold miners are outperforming gold, that again, the mining sector, metals, commodities, they are in a really good position for the next 5-10 years. So cool, that is all. I have nothing more. Again, follow me on Substack, as always, highly appreciated. Also on the Twitter, where I post daily funny stuff, but also, long-term charts and all that good stuff. So have an amazing day. Cheers, guys. Bye.